Good afternoon, everybody. Welcome to CV Labs. Today, we are honored to have some of the leading experts in taxes here presenting for us on really relevant topics. Well, today, I'm your host. My name is Fabiola Luna, and I'm the ecosystem manager at CV Labs here in Zug. Our ecosystem has around 900 plus blockchain-related companies with more than 4,780 employees. We are a really vibrant ecosystem and one of the most developed blockchain hubs in the world. CV Labs is a co-working space that basically gathers the blockchain community in the Crypto Valley, and we focus in different areas like events, education, incubation, advisory, and excubation. We are the community arm for CVVC. CVVC is a venture capital company exclusively focused on blockchain investments. I will pass the word to Mr. Olaf Hanneman. He's the co-founder of CVVC. Hi, Olaf.
Thank you, Fabiola, and also on behalf of CVVC and CV Labs and the entire team, thanks for joining and your interest in the topic, and thanks for the panelists in contributing. So before we speak about the actual topic, tax treatment of cryptocurrency for corporations, I wanted to quickly share a few macro developments that we from CVVC side think are relevant to watch in terms of blockchain and blockchain technology adoption this year, and then also what our key priorities are at CVVC. Next slide, please. So obviously, as relating to the topics, to the topic of today, the big one for us this year is Bitcoin and its development towards a mainstream alternative asset, be that alternative asset or a new alternative asset class in its own right. And we see that with some kind of public corporate uptake in the US, but obviously we see it even more in our discussions with private corporations, investors, family offices, investment funds who consider adding this. And I think that is where the driver will be in terms of mainstream alternative asset class. Then the next would be, okay, well, what comes after Bitcoin? And obviously on the altcoins that have seen quite a run up since the beginning of the year, which was to be expected. There we believe that there's obviously one massive trend, which is DeFi, but otherwise we think there will be more differentiation, more evaluation by investors on true underlying value add of the protocols rather than chasing everything that moves. On the startup side, so companies that build based with blockchain technology, we see on one hand side challenges from the startups with regard to pilot projects, for example, with large corporates and financial institutions just due to the COVID situation. On the other hand, from an investor perspective, there is a lot of interest to invest in great startups, and attractive businesses and use cases can raise funds very attractively and efficiently also in today's markets. We do see a lot of pilot projects still within banks and corporates, and I think there it'll be very interesting to watch the next 12 to 24 months in terms of real world use cases across a lot of industries. Big topic will be central bank digital currencies and what will come and who will come first, and then how do people follow. We hear a lot of, I would say, a lot of expectations from our investor friends in the US as to regulatory developments in the US and what that means for the entire space. And finally, you know, the current situation and what is not the short term, but more the long term impact on startup funding, the economy overall, and getting back to, I would say, a new normal as opposed to a normal. In terms of our focus areas at CVVC for this year, next slide, please. We continue to invest. We're still looking for startups that build use cases. In fact, applications are open for our VC investment program for the fall of this year, and we're also looking at select investments until then. We have launched our first fund-like investment product late last year, whereby investors can participate in our venture capital portfolio on blockchain tech startups. So that's your diversification to Bitcoin and cryptocurrencies, yet still investing in the space. We obviously speak with a lot of corporates on their strategy, how to pilot, how to link them up with our startups, how to find interesting topics in the space. Through CV Labs, Fabiola and the team continued focus on regional growth, bringing our ecosystem into MENA as well as Asia. And through events like tonight and more to come, obviously seek to provide value add to the overall ecosystem. So with that, without further ado, I think we're handing over to the canton, Fabiola.
Yes, thank you very much, Ola, for your intro. Now we will pass the word to Mr. Beat Bachmann. He is the head of the economic promotion in the canton of Zug. Hi, Beat. Welcome to today's event.
Hello, everybody. First of all, on behalf of Canton Zug, I'd like to sincerely thank Fabiola and the whole CV Lab, CVVC team for inviting me tonight. It's always fantastic and valuable to be a part of the ecosystem and be in quite close relations and follow trends. Also, I'd like to use this occasion to really express on behalf of the Canton a big thank to the whole CVV team for many years of great engagement. You guys really are one of the key drivers of the Crypto Valley, and it's a great collaboration. I'd like to convey 4 messages today very briefly. First of all, after 7 years of Crypto Valley, in Zug, it's a great, fantastic story, a sustainable ecosystem. And I think this is a fantastic story we're really proud of. And we thank all of you who is involved in that success. Secondly, Zug as a business location, has been internationally very attractive and known before Crypto Valley. So just like to mention that we still have a broad, diverse industry ranging from tech, deep tech, trading, life sciences, ICT, and so on. And, we try and want to be a really innovative place. Just 2 facts. It was for us really astonishing that in last year, despite Corona, we had a big increase in incorporated companies, inflow of new companies. So over 1,200 new companies have been added to the Register of Commerce. And obviously, quite many of them in the crypto space, a really innovative place. Just 2 facts. It's for us really astonishing. Can you still hear me well? Despite Corona, I hear something strange. So what's important, and really we were happy about that, is that last year, Zug was within Switzerland, per capita, the highest startup incorporation place. So again, it's a great place for startups. My third point, Zug has for a long time, and it still is, a top place for taxation. That's why we're here tonight. And just to remember, Zug is globally one of the most attractive locations in the combination of corporate tax, maximal 12%, down even below 10%, and for individual tax, which is maximal 23%. So here, a great opportunity for entrepreneurs and companies. And the last point I'd like to address is, we Zug guys want to be the most business-friendly people in the world. There should be no better place that has in their DNA such a business friendliness. And we help you, from settling in, starting up a company, throughout your life cycle with all the supports you need. We're a one-stop shop. And this is also true, as you know, for crypto companies, starting from Register of Commerce to tax authorities, etc. So we're a one-stop shop. Contact us, we'll help you, and we're glad to meet you. So Fabiola, that was my little welcome speech.
Thank you very much, Beat. I have a question for you. If a company comes to Canton Zug, they can be fully founded exclusively using crypto. Is this possible?
Yes, sure. Indeed, Zug was 2017, the first canton in Switzerland, I think even globally, the first jurisdiction where, we are so-called contribution in kind, incorporate a company fully using crypto. This is still today.
Okay, that's really, really nice to hear and really impressive. Well, thank you very much, Beat, for the intro, and we are looking forward to the panel of discussion.
Thank you.
Okay, right now we will pass to our next speaker, and our next speaker is Mr. Remo Merckx. Remo is a tax expert for FINEAC. So Remo, please come and share with us about taxes and crypto.
So thank you very much, Fabiola, and for giving me the microphone to speak on the topic and give you more or less a little summary of the general taxation framework for companies in Switzerland. Well, the first point I want to touch is tax jurisdictions. Maybe you have already heard that in Switzerland, the tax jurisdiction is threefold. We have the Swiss Federation, all of the 26 cantons, as well as the 2002-ish communes, which each form a tax jurisdictions. But luckily for the taxpayers, in a lot of the cantons, only the cantonal tax authorities collects the taxes for all the three jurisdictions and then distributes it accordingly. Next point is taxable factors. And here I have to mention we're only talking about direct taxes for companies and companies established as AGs, so stock companies limited, or GmbH, limited liability companies. Subject to tax in Switzerland is the profit and the capital. And regarding the capital, it is the net wealth, which means basically paid in capital, including any reserves and well as profit, which, well, yeah, in the end is the equity. The total income tax rate, in total in terms of that all jurisdictions are included, so federal, cantonal and communal taxes, varies widely within Switzerland. So we are somewhere between 12-ish to 22%. And as we have heard from Beat right at the beginning, the canton of Zug is absolutely at the lower end, around 12%, where we have, as an example, the canton of Zurich at the other end. And maybe on a side note, the capital tax rate varies between 0.001% to 0.7%, which means that most of the time that the capital tax rate is immaterial. And maybe one thing regarding the canton of Zug, the canton of Zug will allow, beginning from tax year 2021, so this year, to pay taxes tax burdens up to 100,000 Swiss francs in Bitcoin or Ether. Then we're coming to the next point, the tax liability. Here, Switzerland differs between unlimited and limited tax liability. A company constitutes an unlimited tax liability when its legal domicile or the place of effective management is within Switzerland. And then as a consequence, the total profit and capital, excluding potentially any profit or capital allocable to permanent establishments in abroad, will become taxable in Switzerland. And then on the other hand, when only a limited tax liability is constituted, which is based on the economic affiliation, which could be in, regarding a permanent establishment, or if your company owns real estate within Switzerland. Then only the Swiss sourced income, as an example, real estate income, which will become taxable in Switzerland. We want to also talk about international tax issues. Nowadays, with globalization as well, in the current special situation with the corona pandemic, working remotely becomes more and more popular, and also is encouraged by employers. However, for sure, there are also certain risks associated to that. So employees working from abroad could, under certain circumstances, constitute a permanent establishment, which would then mean that his Swiss employer would become subject to tax in the country of work of his employee. A PE is in the international tax law defined as a fixed place of business through which the business of a company is wholly or partly carried on. This could be, as an example, the place of management. This could be a branch, an office, a factory, etc. And maybe on a side mark, working from home, or in our words, home office, should in most cases not constitute a permanent establishment. But as often in the tax environment, this really needs to be assessed on a case-by-case basis. And especially should the situation remain unchanged with the situation I'm talking about the corona pandemic, then afterwards you really should assess the situation regarding working from home. And on top of that, when working abroad, social security situation should be checked properly in order to avoid any mistakes in this regard. And then also another topic will be substance requirements. So in case Swiss substance of the company is nil or not appropriate in terms of the business carried out here, a foreign country could try to neglect the Swiss residency and shift the place of effective management to the place of the PE, or where the daily management decisions are taken, and then tries to claim the unlimited tax liability. Again, I also want to talk about tax balance sheet. Maybe you've already heard that Switzerland, in principle, does follow the tax follows accounting, which means that financial statements prepared in accordance with Swiss GAAP basically forms the tax basis. But for sure, that the tax law requires certain corrections. As an example, there could be excessive depreciations which are not commercially justified, which will then be added back to the taxable profit. But basically, tax follows accounting, so no corrections need to be made. Which in the end means that the accounting treatment of crypto coins or crypto tokens also have to be accepted for tax purposes. And as we have said, under Swiss GAAP, assets are basically accounted at acquisition cost and can then be depreciated over time. But there's an exemption to that. If an asset price, or if for an asset the price is available from a liquid market, well, liquid market is an example, is a stock index like the Swiss market index. One could also opt for a fair market value accounting. In this case, the amount of the crypto coins or crypto tokens has to be converted into Swiss francs at the year-end rate published by the Swiss Federal Tax Administration, or publicly available other publicly available information. But then we also have to consider that under certain circumstances, in order to flatten the price swings of special crypto coins as Bitcoin we have seen in the past few weeks, one could book a fluctuation reserve in the sense of a provision. And maybe one last point regarding tax balance sheet, it is in Switzerland is quite special that we are allowing the deduction of the taxes itself of the profit, which means that only the profit after tax becomes taxable in Switzerland. And the second last, compliance. So every company in Switzerland has to file an annual corporate tax return with the cantonal tax authorities, which covers the direct taxes of all 3 jurisdictions. And as we have heard just before, tax follows accounting, and thus profit and capital to be declared are based on the Swiss GAAP financials. And again, losses of the last 7 years can be deducted from the profit. And at the end, based on the filed tax return, the tax authorities will assess taxable income and capital and issue their tax bill and require you to pay within the payment deadline. And then also talking about blockchain, cryptocurrencies, and tokens, we don't can forget the other taxes. So for companies dealing with tokens, there are further taxes need to be considered, like value-added tax. We have withholding tax and security transfer tax, which will also be covered within the next presentations by Tom and Silvan. So thank you very much for your time, and please feel free to contact me anytime you wish. And with that, I would like to give back to Fabiola. Thank you very much.
Thank you, Remo, for your presentation. And we will ask you further questions during the Q&A. But now I have a question for you. What happened if a salary, if there is an employer based here in Switzerland that is subject to the Swiss tax, and then he has employees working abroad? What will happen in this case?
So then we have a case that you have a Swiss employer, but you're entirely working abroad.
Yes.
So you're neither a Swiss resident nor physically working in Switzerland, and then you should not become subject to Swiss income tax. However, this is only true for employment income. This could be different for self-employed people. And Social Security contribution should also need to be checked based on the country of residence. That's always an important thing and often gets forgotten.
I see. Well, thank you very much for sharing. Right now, I will pass to our next speaker. Here we have Mr. Thomas Linder, and he is a tax partner and certified tax expert from MME. Hello, Thomas. Please share your presentation with us. We are looking forward.
Hi, Fabiola. Thank you very much that I have the opportunity to join you today. I will start just with the topic of legal entities. Because we have different types of legal entities, and in the crypto valley, kind of everyone thinks that the foundation is the right legal entity for their project, just because Ethereum incorporated the foundation like 8 years ago. So everyone is following like lemmings, but maybe it's not the right legal entity for you and for your project. So what are the options? I think you have to distinguish between 2 different purposes of DLT projects. One side are business investments, where people invest into a business operation, and these are for-profit activities. You want to have shareholders, beneficial ownership. So if you want to go kind of in this, let's say, vertical investment world, then you need to go with a corporation or an LLC. So then you need to have a business entity, and the foundation is totally the wrong legal entity for you. However, what we see in DLT projects, generally it's not about the business investment. Generally, it's about the support of innovation and development. And most of the Crypto Valley entities that are developing a specific technology, specific protocol, or an application, they're actually not doing this for a profit purpose. They're doing it because they want to develop an ecosystem, because they want to launch a platform that can be used, open source, everyone can work together, there is collaboration. And if you are dealing with such an ecosystem approach, then you need to ask you a second question. How are you actually governed? How shall the activity be structured in the future, and who shall actually be the relevant entity here? If you're centrally governed and you still want to have a shareholder, and the shareholder is relevant, and he is the one that gives guidance and invests money and also expects some profit, then still the limited and the LLC is the right entity for you. However, if you have kind of a membership-driven approach where you say, no, actually, I want to have much more members that are voting on specific types, that are actually giving the strategy in the project, it's still a central governance, but a little bit more decentralized in terms of membership. Then maybe an association is the right entity for you, because an association has members, and members are voting on the management of the company. That's then where we when we find the foundation, you actually say, actually, I don't want to have any shareholders. I don't want to have no beneficial owners of this structure. I want to have a legal entity that is the spider in the web, that has some assets and has a purpose, and can only use the funds that are allocated to this entity for this specific purpose. And it cannot do distribution, cannot take out any money for non-purpose goals, for Lamborghinis or whatever you want to finance. And in that case, the foundation is the right entity to go for, because the foundation is a legal entity that actually is kind of, it's acting like a smart contract. So you need to predefine the purpose, and you put some money in it, and then from that point of it's kind of self-governed, and the funds that are locked in can only be used according to this very specific purpose. But as said, you cannot take out money and buy Lamborghinis, very important for every project in Crypto Valley in general. Now, if we jump to the topic of token classification, most probably you know the FINMA classification. FINMA is the Swiss regulator, and they have 3 categories of tokens. They have payment tokens, asset tokens, and utility tokens. And actually there is a 4th category, very important, hybrid tokens. So tokens that can be 1 or 2 or even 3 of these categories. Now, the FINMA approach is very purpose-driven, because they have 2 laws that they want to apply. They have anti-money laundering law, they have security law, and they have no law in the 3rd category. And that's why there are 3 categories. So payment tokens are subject to AML legislation, asset tokens are subject to security legislation, and utility tokens at the end are not subject to any regulations. But as I said, this is a very purpose kind of driven allocate or classification by FINMA. If we now look from a mere legal and tax point of view on tokens, this is still relevant. So kind of this purpose, payment tokens have a settlement purpose, utility token have a usage purpose, and from an asset token, I expect an investment. However, from a legal point of view, we ask different questions. Our main question actually is, do I have any right that is kind of synchronized with the token, that if I transfer the token, that and also this legal right is transferred? And in the law environment, we know 2 types of legal rights. One are, or the first one, I start from the bottom. The first one are absolute rights. So absolute rights means property. So I can be the owner of a Lamborghini. I can be the owner of a piece of gold. I can be the owner of something. So, and that's, the question is, if I transfer a token that is linked to the ownership of something, then I need to make sure that if I transfer the token, that then also the underlying absolute right is transferred to the other party. Second category are relative rights. Relative rights are claims against counterparties. So you always need someone that is promising something to you. That can be a payment, or they promise a service, or they promise kind of membership, or any equity interest, etc. So relative rights always need a counterparty. And now what we're seeing here in this decentralized world, there are settlements, there are utilities, there are even investment purposes, but with no counterparty. So actually the network is your counterparty, and it's not really a legal person or an individual. And that makes it very special. So from a mere legal point of view, we say you don't have any rights, you only have functionality. And you can use this functionality in the network according to the rules and circumstances at that moment that are available in the network. And that's very important from a tax point of view in order to qualify income tax, but also VAT treatment. So the tax authorities have defined in different guidelines also different types of tokens. Usually they use the same terms like payment, utility, and asset token. However, they have slightly different descriptions what these categories mean. So you need to be very, very careful. If you take the FINMA qualification, it doesn't mean that for VAT it's the same. It doesn't mean that for direct tax is the same. But the tax authorities in Bern for direct taxation, they took over this native token category and say this is a token where I don't have any legal claim or no legal rights towards anyone actually. So I would put into this category Bitcoin, Ethereum, all the protocol tokens, even some decentralized application tokens that are really used in decentralized dApps. The VAT authorities, just because that's their mindset, they always see a counterparty. So the VAT authorities actually have defined a payment token that can only be used as a means of payment. They have a category of utility tokens. So these are kind of prepayments for services or supply of goods or some type of license or IP. And then there are some specific equity and debt tokens that are defined in the guidelines. However, there are a lot of kind of blind spots in these definitions. So for me, especially kind of voucher types of tokens are missing. They're even kind of in the definitions, real shares and funds are missing, and all the asset-backed ownership tokens are missing as well. So again, just as a summary, in a way, just be very careful. If you hear this is a utility token, it doesn't mean that it's a utility token also for taxation, because it's very important to know. I mean, according to the FINMA regulation, because the utility token is not regulated, you try to push everything into this utility category. So out of AML regulations, out of security regulations. However, according to VAT law, the utility token is the only one that is a taxable token. So if you sell a utility token, it's subject to VAT 7.7 in Switzerland. If you export it, it's then not subject to Swiss VAT. But that's why actually from a VAT point of view, we don't want to have anything in this utility token category. We rather have vouchers or payment tokens that are actually no supply at all, or you have some exempt supply with asset tokens. So that's why it's very important that you do this categorization. What we have in addition, just from an accounting perspective, if you, it's very important if you do a token generation event, if you do a crowdfunding, if you do an ICO, it's the question, how do you book for this? Because you get a lot of money and you need to do a lot of development over time. For us, from a tax point of view, you always need to look at what do you actually get? What is the promise that you get in return for your investment? And if we look at crowdfunding, there are actually 3 different categories, either equity-based crowdfunding, debt-based crowdfunding, reward-based, where you expect some supply or a sale of good in return, or it's a donation, kind of to a charitable purpose. But you see, from a tax point of view, all categories can have different tax consequences. So for equity-based crowdfundings, you need to consider stamp duties. You have withholding tax on dividends. So that's kind of, you need to do this right. Or on the other hand, if you have a reward-based crowdfunding where you promise supply of goods or services, then again VAT comes in because you get something in return, and all the deliveries of goods and services are subject to VAT. So first, very important to qualify your crowdfunding. You need to qualify what are you promising to the community in return. And then, on the other hand, the accounting treatment is important as well. There are guidelines actually published from Expert Suisse. Expert Suisse is kind of like the Pope of accounting in a way in Switzerland. So if they say this is how it is, then this is the rule, how to go for, and there is no discussion. And they have defined different kind of case studies where they have commented on ICO transactions. And they have done different case studies and have provided the accounting treatment for each case study. I don't want to go into the details. You can read it yourself. It's very detailed. However, they took kind of a, let's say, a classic ICO where you have a company that is promising to develop a protocol, and you contribute money, and once the Genesis block of the protocol is launched, then the utility token is allocated to the contributors. And here you get a lot of money in the beginning. Let's say you get 100 million. The question is are these 100 million now subject to tax at 12% in the canton of Zug? So you pay an upfront tax or not? And here from an accounting perspective, because you promise to develop a specific technology on a long-term basis, you book at the same time a passive balance sheet item. So you kind of net the income, and at the time of financing, you don't have any taxes to pay. Then over the time of the project, you then release your passive balance sheet item and you recognize income at that time. But that's very important. So you don't pay taxes up front. There is another case study with a foundation, same treatment. And then there are other case studies. One is a voucher type, and the others are really investments in equity or asset tokens, where you actually then expect a dividend or a reward that is paid out over time. But these are totally different kind of crowdfunding types. But if you need details about the accounting treatment of your project, just go to this Q&A. I have put the link on the slides, and you will find all the relevant answers from an accounting perspective under Swiss GAAP. So that's it from my side.
Hey, Thomas, thank you very, very much for this fantastic presentation. I have a question. You know, here in the Crypto Valley, we talk a lot about the unicorns. Currently, I guess we have 8 unicorns registered here. So, well, for everybody, like a unicorn is considered by venture capitalists as a privately held startup that is valued at more than $1 billion. And then here we have some examples like Ethereum, Tezos, Cardano, registered in Switzerland. Can you please develop what will be the tax treatment for such corporations?
Yeah, the main question is here, where is this billion? Is the billion actually in the legal entity, or is the billion valued in the network? So if you look at Ethereum, Tezos, Cardano, all these protocols, kind of the billion is not in the foundation, because as we have learned, the foundation does not have any shareholders, and as a token holder, you're not kind of participating in anything. However, you're participating in the technology. So the value in the token comes from the technology that is created, comes from the network that is created on top of this technology. And the more people want to use the technology, want to transact on the network, then the value is increasing. So in that case, the value as such is actually in the network and is only partially in the foundation, because the foundation certainly also has some tokens. But as said, no one is kind of the owner of the foundation, and also the value that is accumulated on the tokens that are in the balance sheet of the foundation. The foundation need to reinvest such capital gains into the ecosystem, into the network, and cannot distribute dividends. So actually, just for the foundation, this billion valuation is actually not the right term. So it's not, they are not the unicorn, it's their product and their ecosystem that is raising in value.
I will ask another question right away, because this is addressed directly to you. You say, if you do an early contributor agreement for the issuance of payment tokens, what are the tax implications?
Yeah, if you have an early contribution agreement, the question is also, most probably you are promising not only a payment token, most probably you are promising to develop a specific application where you then issue a payment token that is allocated to the contributor. So in that way, you still have a contribution, an early contribution, but at the same time, you would put a passive balance sheet item on in the P&L or on the balance sheet, but you net it off in the P&L so that you don't have any income at that time, and you would then release it according to the kind of timetable of your project. If you're just selling tokens without any plans to develop technology, then you are realizing a capital gain, and this is subject to income tax at the ordinary rates.
Excellent. Well, thank you very much, Thomas, for the presentation. We will ask further questions later on during the Q&A session. Now, we will pass to our next speaker. We have with us Mr. Silvan Amber from Certified Tax Expert, and he will be presenting taxation of employee token plans. Silvan, thank you very, very much for being with us today.
Yeah, hello everyone. Thank you, Fabiola, for the introduction. Well, one of the kind of most interesting tax topics that my clients typically face when they are coming to Switzerland and setting up their companies to develop their platform or whatever they do, apart from the topics that Thomas already explained, which is kind of the income tax on the ICO proceeds and the VAT treatment that is very relevant, is when you start to design a plan, or it doesn't even need to be a formal plan, but if you want to incentivize your own employees by giving them those tokens, and that's typically if you develop your own tokens, you also want to use it as an instrument to either pay your employees or at least to kind of incentivize or make them familiar with their own tokens. So there is typically a point in time where you want to give them tokens. And the question comes up, like, how are you going to tax them, right? So if you go to the next slide, the typical case is like for a development company of a blockchain protocol or something that needs an own token and gives it to the employees. Now, Switzerland has quite a lot of regulation and guidance on the taxation of employee incentive plans, like share plans, option plans, RSUs, but these don't talk about tokens. And unlike all the other kind of tax topics where we try to make analogies, the analogies for those plans don't really work because they are so specific, and token is really such a different concept that the tax authorities have developed different practices. So you cannot just say, well, it looks like a share, so we're going to tax it like a share. It's actually different. And the other funny thing is that this Canton of Zurich and Zug, they have developed a completely different way to look at tokens, which is rare because typically tax authorities try to align themselves and they try to harmonize their practice. But here, we're really talking about two different concepts that those tax authorities have developed, and they stick to it. So that makes it a bit more complicated. When we talk employee token plans, it's important to understand it's really about their own tokens. So we're not talking about giving Bitcoins or Ether to an employee. That's just like a salary in kind. That's rather easy because you just need to evaluate those tokens and then you treat it as any other kind of salary in cash or US dollars, like whatever you want to pay. We also typically don't talk about the advisor tokens because advisors, they are normally self-employed or companies that send invoices. So there we treat it as a kind of a service provision and not as an employee token. Employee is really about, I have an employee in a kind of labor contract relationship that I kind of want to incentivize or pay. Also, this practice doesn't apply if you're just giving cash based on the value of the tokens, which is rather unlikely because if you have a token, you typically want to give the token and not just like fiat money that corresponds to the value of the token. But just to be clear, what we're talking about is really your own token that is also kind of a product of the work that your employees are doing in the company. You know, if they work well, the hope is that the token value will increase. So they're getting incentivized because they can develop the value of their own tokens that they're holding. That's why it makes it a kind of employment incentive scheme. Now let's go through the tax practice quickly of like how Zug and Zurich are looking at it, so you understand kind of these different mindsets. What the Canton of Zug says, well, there is no guidance for tokens to treat it as employment incentive scheme, so we don't treat it as one. What we do is we say, well, this token is just like an object, it is a virtual object that you give to your employees, so it's part of your salary when you give it. So you just have to find the right value, but actually we treat it as any other kind of salary. It's taxed when you transfer the token. And they don't really recognize that concept of employment incentive scheme. And the benefit of that is like, it's rather easy, you know, you give it away, you tax it, and then you're done with it. And it's good for the employees because they get it like when it is still a very low value. And if the project is successful, they get tax-free capital gains in Switzerland because there is not really this relationship to their employment that would make it somehow taxable. That's the positive thing. The negative thing can be quite burdensome for the employee because they get the upfront taxation. So when the token is transferred, in that moment they have to pay tax. So imagine they get it directly during or after the ICO, it had this huge value, and then it drops. You know, it's like the project is not successful, they get nothing in the end, but they have a huge tax bill to pay. Especially problematic if you give them some kind of like vesting or blocking periods that they cannot even sell it. So this like they're stuck with the tax bill, but they're not even allowed to transfer the tokens. They might not be able to pay the tax. So this is a very risky approach. You need to be very careful how you give it to them, those tokens, so that you not kind of kill them on their tax rate. However, there is a rather easy workaround. If you don't want to have this treatment, then just don't transfer the token. Just give them some kind of you promise them tokens, but they're not getting them yet. So they getting them only in the future when the token is listed, when they can sell it. But anytime, like over time in the future, don't transfer them in day one, as many projects have done in the past, because then they will be taxed in day one according to the Zug practice, right? This is kind of the logic of Zug. The logic of Zurich is quite the opposite. They say, well, it's like, let's make it easy. Everyone that gets token, we just treat it as kind of employment incentive scheme, which there is a developed practice for employment incentive scheme, and just apply this. So we're not taxing the employee at all when he gets those tokens, irrespectively of whether he can sell it or not, or if the token is listed, we don't care. We sell it once the employee is actually cashing out. So only when the employee sells the token for fiat or Bitcoin, they will actually have something in their hand that we can value. And it's much easier if we only tax them then. So like that's positive for the employee in terms of like, there's no upfront taxation. They know exactly what they get. When they cash out, they can also pay the tax bill. That's also quite a positive aspect. And many employees actually prefer that over the Zug practice. The downside is like, if the project is very successful, everything that they get is subject to full taxation and social security. So their tax burden, if they live in the city of Zurich, can go up to like 50% if you add in the social security contributions as well, and if they're in the highest tax bracket. So it's really like the high tax solution. And another problem that is often underestimated is the taxable event can happen in the future when the employee is not anymore with the company. So like the employee has left, and 2 years later he sells these tokens. The employer would still be liable to deduct the relevant taxes, like could be source taxes for a foreign employee, it could be the social security contributions, but the employer needs to implement measures to ensure that he actually can comply with that. And if the employee just walks out and takes the token with him, how would he ever like find out, or how would he ever be able to pay the tax on those salaries? That's the big problem with the Zurich approach. And the only way really to work around in Zurich is you give the token to the employee in cash, and the employee buys the token on the market from a third party, not from the employer, because that's the way that you can circumvent kind of the treatment as an employment incentive scheme. Because as soon as I buy something from a third party and not from my employer, it's not an incentive plan anymore. Because the Zurich tax authorities, even if you buy the tokens from the employer at the market value, if you do a valuation, even if you buy it, the Canton of Zurich will very likely not accept this and still treat it as employment incentive scheme. So rather a difficult like concept as well if you don't pay attention in how you structure it. Now, question might arise, well, like what does it mean, like if these two concepts are in conflict? Like if I have an employer in Zug, but if I live in Zurich, like which rule do I apply here? Like, doesn't make sense. Now, it's clearly that the employer canton is relevant. So if your company is in Zug and your employee is in Zurich, for example, then Zurich will accept, or will have to accept, the Zug methodology. So that kind of is how it's ruled, and then you just need to figure out like where the employer is going to be located, and then by that you choose also the practice that applies. Then please also don't forget, there is also potentially VAT on the tokens. I mean, Thomas explained these different token types. And if you have a utility token, and if your employee is sitting in Switzerland, you need to be aware that giving them those tokens will constitute a taxable transaction for VAT. So we'll actually have to add 7.7 VAT on the tokens that you're giving to the employee. That's just something that you need to be aware. VAT also applies on tokens given to the employees. In practice, one of the biggest challenges is then like, what is the value of the token? Especially if the token is blocked, vested, not yet listed anymore, like anywhere, like how do you determine the value? And typically the client come to me and say, well, it was quite early in the project, so the token has no value. Now, tax authorities typically don't believe that, because you wouldn't give away those tokens for free to just anyone, right? So I think it's not really reasonable to assume that the token has no value at all, even in the early stage of the project. Just because you have never sold it doesn't mean you have already put in quite a lot of effort in the token that would give it value. So you need to come up with some kind of a reasonable valuation methodology. If you have a third-party investment round, like a pre-sale, even an ICO, that's of course the strongest benchmark, because someone is willing to pay at a certain time this price for the token. So that's typically the mark that you're using as a reference point. In a very early stage, you might be able to use other methodologies, like the costs for producing it, or like what have you already put in as effort, but it's rather weak in comparison to maybe 3 months later you sold it for like 10 times the price to a third party. Then of course you might be able to add discounts for blocking periods, for lack of marketability. There is Black-Scholes models. There is this kind of 6% discount per year of blocking that you use for shares that you might apply, but there is no clear guidance of how this valuation should be made. So I would definitely recommend to establish a valuation methodology, but then discuss it with tax authorities in order to make sure there is no conflict, because if they challenge it a few years later, you might end up in a quite a troublesome discussion with the authorities. Now, summarizing, like, how do you approach this when you want to incentivize your employees? First of all, you have to choose your canton, because by choosing your canton, you choose the system of how it's treated. It's not obviously not the only relevant criteria, but it might influence your decision, like where you're going. Then you have to design your token plan carefully, because these details on how you give the tokens to the employee might be quite relevant in practice, even like further down the road. You need to take care of the valuation, like how do you value those tokens? You need to come up with a methodology, and I would strongly recommend go to the tax authorities and discuss the model with them, because they will be happy to share their thoughts with you, and they give you, normally they give you a clear like guidance on how they look at your specific case, and that gives you a lot of peace of mind and reduces your risks in the future. That was the introduction of employee incentive tokens. If you have any further question, please also do not hesitate to contact me. And if you have any questions here in the chat, I'm happy to answer them.
Hi, Silvan, thank you very, very much for sharing all this with us. And I have a question. How does this practice apply to founders?
Yeah, founders is a very complicated situation. I mean, you could take the rather easy approach and say the founder is also just an employee. So we give the founder a contract, and we give him under the contract the tokens. That would definitely be one of the solutions. Now, a lot of founders, they think of those tokens a bit of something like, well, this is my baby. I invested quite a lot of time in it, and now I can keep 10%, 15% of the tokens for myself, but I never really give that token to the company. So it shouldn't be taxed as salary, because it was always mine. It was my project, so like I just keep it and never give it to the company. That might sound logical for the founder, but the considerable risk of such approach would be that, like, if this was your personal project and your tokens are like, they stay with you, there is this kind of notion of self-employment. And the big risk when you do it like this, and you never really paid out from the company to yourself, and you pay tax on this like event, is that those tokens would constitute part of your business assets in your private wealth. And that's very unfavorable for a tax perspective, because that means every capital gain, every sale that you do personally will not be tax-free, but it will be subject to income tax. and social security contribution. And that's the biggest risk that you want to avoid as a founder, is you want to clearly separate your personal investment in the tokens from the company, because the company is the one that protects you from being taxed as a self-employed individual. And that's definitely not what you want to have in the end.
Thank you very much, Silvan, for the clarification. Now we will pass to the last part of our presentation, and this is one of the most interesting because we have the Q&A and the panel discussion. So we will have everybody on the screen right now, all our experts. And I will start asking just a quick question to Beat. Beat, Switzerland is the first jurisdiction in the world accepting tax payments with crypto since February 2021. Do you think Switzerland is prepared to host large institutions like, for example, like Tesla?
Yeah, who would not like to have Tesla? So, you know, I think the answer is very simple. I mean, I'm not the finance minister of Switzerland or the Swiss government, but I think from the experience, you know, we saw in the last decades, Switzerland was always, you know, being so relatively small, was always bold enough to play in the global league and, you know, to basically be open for any new endeavor. And I think, you know, we have the infrastructure. We have shown in the whole finance world that we are a global player. And I would not see any reason why, you know, we would not be able to host such institutions. I mean, everything is ready. So, sure, if anybody, you know, can get us in touch or the Swiss finance minister, let's do it.
Excellent, excellent. Thank you very much, Beat. I will have now some questions for Finiak, and then I will ask to Albert, to Mr. Albert Bladman. Albert, what will happen if Tesla will be domiciliated in Switzerland? What will be the tax treatment for them?
Thank you, Fabiola. I wish Tesla was a Swiss company and was maybe founded in Switzerland. What will be the tax implication? I mean, they will be, if they don't have income for years, so I think there is no tax due in Switzerland so far. But if there is an income in the company, it will be taxed. If they are if they would be in Zug, it would be taxed at 12% as mentioned before. Yeah.
Okay, so just to keep going with these interesting questions. Like yesterday,
but I think they never paid taxes, so they didn't have a lot of income yet, or taxable gains, I assume.
Excellent. Just one more question. Like yesterday, it was an article published saying that an analyst at Wedbush Securities make an estimation, and by now, on the investment that Tesla made 1.5 billion worth on Bitcoin. By today, the gain on that investment will be around 1 billion. What happens in that case when tokens in the balance sheet increase so much in value?
This was mentioned before, you know, first it's a question of the accounting practice under Swiss GAAP, the tokens or the cryptocurrencies or even shares or other currencies can be showed in the balance at the cost price. So it means in the case of Tesla, they still could show in their balance sheet the price they paid for the Bitcoins, and at the end of the year, of the financial year, they are still able to show it at that price. And it means the unrealized gain, because they didn't sold the Bitcoins, the unrealized gain wouldn't be taxed because it's not showed in the P&L and in the balance sheet. So it's another question if they would realize the Bitcoins, so if they sell the Bitcoins and they really have the the realized gain of $1 billion or whatever the difference is, then this would be taxed in Switzerland on the level of 12%. And again, as Remo mentioned before, if there are losses carried forward, possible for 7 years, then they are able to offset against these losses carried forward.
And last question about this Tesla case. First, they announced that they invested 1.5 billion worth of Bitcoin. And the second thing, they announced as well that their clients are able to pay for their products using Bitcoin. So let's say, what will happen in the case that a car agency here in Switzerland is selling a Tesla car using Bitcoin to somebody? What will be the tax treatment for the agency and for the buyer?
For the agency, there is no difference if they take Bitcoin or US dollar or euro. I mean, there is a price in Swiss francs, I assume, and converted to a foreign currency or to Bitcoin or to Ether, and therefore at the moment they get the cryptocurrency, it's equivalent to the Swiss franc. And after that moment, if Bitcoin increases or a loss, there is a loss on the Bitcoin, then it's in the P&L as a loss or a gain on currencies. Doesn't matter if this is Bitcoin or euro or US dollar, if it's realized. And for the buyer who buys a Tesla with Swiss francs or euro or Bitcoin, there is no difference in what kind of currency or crypto they use to buy it. The only question maybe is for VIT, if it's a private person, this is maybe not a question. As a company, if you're subject to VIT, you need to get a invoice from the seller showing the Swiss VIT to reclaim it if you're subject to VIT as a company. But otherwise, there is no difference between Bitcoin, euro, US dollar, or Swiss franc by the moment somebody sells or buys something.
Excellent, Bert. Albert, thank you very much for all these explanations, because we were really curious about this type of cases. And then we look forward for many big corporations to come here to Switzerland, to Canton Zug. And then there are plenty of experts ready to help. Okay, I will pass to another question. Remo, regarding the tax treatment for corporations in Switzerland, what will be the preferred location, or what will be the preferred canton to go?
Well, the most obvious one, the Canton of Zug, as we heard from Beat right at the beginning. I mean, if you're looking at the question pure tax driven, then it definitely is Zug or some of the communes in the Canton of Schwyz, or maybe other cantons in the central of Switzerland. But for sure, it's not all about taxes. And we heard that the Canton of Zug is quite friendly in terms of crypto or blockchain companies. We are in the midst of the crypto valley. So if you decide to come to Switzerland, you definitely can't neglect the Canton of Zug.
Yeah, I think the big advantage of Zug is that the authorities are already experienced. So you can talk to them, whether these are the tax authorities or the economic promotion. They know what you're talking about. And if you're somewhere where I live here in Aargau or in the city of Zurich, maybe they're not that much experienced, and you don't get the right answers that you expect. I think that's the first advantage. And the second is just Zug is much smaller, so the authority is smaller, and you talk to the head of corporate tax, and if he says yes, it's yes, and if he says no, it's no. And in the Canton of Zurich, you don't know whom to ask, and if you ask, they say they need to ask someone else. So that's kind of the atmosphere that is it's really a benefit of the Canton of Zug.
Yeah, a big benefit, because here, well, as we have heard over the course of the presentation, basically people can do everything. They can first register the company completely using crypto. They can pay the taxes, and as well, they can pay the services of the tax consultants in crypto. Yesterday, they shared that they accept Bitcoin for to pay their services. So really, Switzerland is fully prepared to welcome all the companies and entrepreneurs that want to come here. Thomas, I have another question for you. What rulings can be obtained with the tax authorities about project financing?
In general, you can ask the tax authorities everything you would like to know and present all different facts and circumstances, whether this is income tax, VAT, withholding taxes. Maybe it's a different authority, so you need to ask the right person, certainly. Just with regard to project financing, in general, we have two rulings that I see. So you have the projects that we had a look before, where it's non-profit, it's locked in a foundation, it's very long-term. There you generally get the ruling that you can put this passive balance sheet item into the balance sheet and net off the income. And actually such foundations are not tax exempt. So I think that's important. A lot of people think foundations are tax exempt by law. It's only applicable to charitable purposes. And so far the tax authorities have not agreed that the support of an ecosystem is a charitable purpose. So that's why the foundations are subject to tax. However, they have a specific ruling. If you are long-term project developer and you perform maintenance, as long as the project runs, you can net off the income, and the foundations pay then usually based on their expenses and the profit margin of 5%, they pay their taxes based on this calculation. So you take the annual expenses plus 5%, and this 5% is the income that is subject to tax at around 10% for foundations. So at the end, it's a 0.05% tax on the expenses.
Fantastic.
If it's for profit, then it's a little bit different. There, the tax authorities say actually they see two phases. One is the development phase, and one is the business phase. And during the development phase, you usually don't recognize any income, and you net off all the income with a balance sheet item. But then once you generate turnover and income with your business case, then you're subject to ordinary taxation as any other company that is doing business in Switzerland.
Yes, we have a lot of questions in the live chat. Many of them have been already replied by Thomas. Thank you very much, Thomas, for doing that. But one recurring question has been about staking. So how the income of the staking is treated for corporations in the balance sheet?
Just on the first hand, I think you need to qualify the type of staking. And I mean, there is staking where you are also validating in a network. There is kind of delegation, delegated staking, and maybe there is other types of staking where it's actually unrelated to validation. But in general, any type of income that is generated in the company belongs to the profit. And you can set off all the expenses that you had to generate this profit. With regard to staking, I think the main question is the time of income recognition, especially if you, let's say, you're staking Ethereum 2, where actually it is still on testnet, and the new tokens that are accumulated are still locked kind of in this closed ecosystem, and only when then the network is launched into mainnet, these tokens will be unlocked and you can freely start trading. I think in such situation, I would say you have not realized the income until then kind of the conversion into the mainnet happens and you can freely transact. And then from that time on, it would be recognized as an income. But these are kind of these are the main questions you need to be able to answer. So at what time do you actually have the full access to a specific token? And at that time, it then also belongs into your P&L.
Excellent. Silvan, can you please explain to us what will happen if an employee gets the salary in tokens and then he does some staking?
Yes, again, this depends on whether the Zug or the Zurich practice applies. When the Zug practice applies, the tokens are already transferred to the employee. It's his private wealth, so it will be taxed as if any other private person does the staking, which is a bit complicated from a compliance perspective, because you need to figure out like how much did I get on which day and how much was the value of that token at the day, because you want to differentiate, because what was my staking reward, which is a taxable income, and what was actually my capital gains. So you would have to do a bookkeeping of every day, like how much did I get and what was the value at that date, and then calculate it. And all the rest is just a change in the price. And hopefully, if you stake with a Swiss provider, they would do that for you. And if not, you have to figure out yourself a methodology to track all those tokens. That's if you do private staking, and that's what happens if you have an employer in Zug and you got your tokens already into your private wealth. If you're in Zurich, I would say that because Zurich says that everything is a phantom kind of employment scheme, those staking rewards are not really yours. They are still in that sphere of employment, and they shouldn't be taxed at that moment, but they would be taxed as soon as they convert. You convert them, and everything that you get from that conversion would be salary, as so subject to income tax and social security. However, of course, you cannot do that with Ether, because Ether is not an employment incentive scheme. So if your employer gives you just Ether and you stake Ether, that's, again, even in the canton of Zurich, that's a private investment then, and not an employment incentive scheme.
Excellent. I think we have some many participants joining from overseas, and we really value your participation. There is a question here that is, it's quite general, but it's valuable to ask. Several countries had banned crypto transactions in the banking system. Others are actively prosecuting exchanges. What is the legal and regulatory position of Switzerland on crypto investments? Remo, maybe you can develop a little bit on this?
Yeah, I think that's an interesting question also for Switzerland. I mean, we have read about US regulations. We have heard that South Korea wants to levy a special tax on crypto trades. But as far as I know, I think there is no such regulation or ban inside for Switzerland. And as we all hope for the canton of Zug, no such thing will come in the near future.
Excellent.
Actually, just keep in mind, I mean, the Federal Council, so kind of the 7 presidents of Switzerland, they have issued a report in 2015, I think, about Bitcoin and kind of risk and cons and pros and what are risks. And they just have said, actually, we qualify it the same as any other means of payment. And that's still the case today. So the Swiss regulator treats all the payment tokens as any other means of payment. Now we have just enacted the new DLT law, where you actually can create shares based on a DLT register. So Switzerland is fully embracing the technology, and there is no regulatory pushback at the moment. You even have 2 banks that are just crypto based, like Signum and Seba, and they got the banking license. I don't know any other jurisdiction where this was possible in such a short time frame.
Yes.
And Thomas, you should add that the MME, issued the first digital share.
Yeah, right.
On February 1 at midnight, for 5 seconds.
About that, but it was the law entered into force on February 1st, and we tried at midnight. It was then 1 minute after midnight to issue the first digital shares based in Switzerland, right?
Okay. I have another question that is quite interesting regarding decentralized organizations and decentralized finance. Where this type of organizations are taxed. Silvan, can you develop on this? If you have
that's a good question. I mean, the tax authorities are not really prepared for decentralization, I would say. I mean, they have never had to deal with that question. So as far as these companies are going to be more prominent companies, if you want to call it like this, they will have to deal with it. The only authority that has really commented on it so far was the VAT authorities, and the VAT authorities still struggle with that concept of having something that is kind of nowhere. So for them, the issuer of the token or the development company is still kind of the main responsible authority. So this is a bit problematic if you develop from Switzerland a decentralized organization. You need to be aware that depending on like how the authorities look at it, that even the transaction on the platform might actually be considered as being done by the platform, by the company, which contradicts the concept of decentralization. So I think we need more development in that regard. With respect to income tax, I mean, the decentralization really isn't anywhere where it could be taxed. I think the way to go for the tax authorities would then be to tax the token holder. So whenever the token holder derives profits of his smart contracts, that's actually where the profit is with the tax subject. So rather than trying to invent, I mean, if the decentralized organization would be an object, you could try to tax it, but like how would it pay taxes? Much easier, I think it would be to disregard it as an entity and rather look at the token holder and say like, yeah, well, if anyone derives a profit from those organizations by owning tokens, that's the one who should be taxed on the increase of the value, and then you can more or less capture everything. But that's definitely something that needs to be clearer developed, and I think it will develop once the cases are with the authorities.
Excellent. Well, I think we have covered a lot of topics. The presentations were quite extensive and comprehensive. We are really, really grateful on the name of CV Labs and CVVC and everybody, the community. We really thank you for all the investment you have done in time and in preparation, because everybody here invested a lot of time preparing for today, for the topics. We had a lot of questions from the public. Most of them were already addressed on the private chat in YouTube. I really want to thank you. I don't know if any of you would like to make some final remarks or reply a final question from any topic. Beat, maybe just to close and finalize, like Switzerland is the first and one of the most friendly ecosystems in the world regarding crypto. So what are the benefits, the long-term benefits of having this ecosystem here in this area?
Well, I mean, it's I think another proof what Switzerland has for decades been. It's been, a breeding place and a top place for, disruptive technologies. And I think, this is a great thing that Switzerland again shows that, we're basically leading, the change into digital banking, digital asset management, blockchain as a technology. We know what all industries are, in Switzerland. So all these use cases spreading, blockchain technology in all these industries is, cutting edge, position of Switzerland and confirms our leading innovation place. So I think for everybody, it's a great branding and it's a great, promise for the future.
Awesome. Well, as mentioned, we have been 1 hour and a half running the event. We are really grateful for the participation of everybody. I think questions in the YouTube channel have been already addressed. All the contact details from our participants today are available. So if you need anything else, feel free as well to reach out to CV Labs. Well, on the name of CV Labs, I really thank you, everybody, and I wish you a really successful continuation of the week. And if you are from overseas, we thank you for your attention. And if you want, you have any questions related to Canton Zug, to Switzerland, Mr. Bachmann is always open and receptive to all questions and requests. And as well, you can always contact our tax advisors. Well, I will close the event, and I hope to see you in some of our upcoming events. Please stay good, stay safe, and stay healthy. Thank you very, very much. Ciao.